studio to chat to me about this is Ashraf Mohamed. He is from Arqaam Capital, and we also have the lady with us today, Samke Mhlongo. I haven't sat with you, Samke. Welcome.
Thank you very much.
From TNC Capital. Honor ladies, right?
Sorry?
Honor ladies?
Yes.
Yes, we honor the ladies. Samke, your impressions of Tito's budget and how the market reacted?
Well, I think if you listen to the budget speech, there was a lot of emphasis on the fact that we understand that the economy is in a tight position. We understand that it's not just domestically, but globally as well. And I think there was a lot of emphasis on the fact that we need to really clamp down on corruption more than anything. For a number of years as South Africans, we've had promises, we've had fantastic plans, but if you actually look at the numbers and our performance, we're nowhere near reaching our NDP goals.
Right.
We are nowhere near the economic growth we need to reach those, to lower unemployment, which is growing. We've got a growing fiscal budget deficit, and we have rising unemployment and rising cost of living. So if you look at the numbers in terms of our economic growth vis-a-vis our population growth, we've actually gone sideways for 10 years.
Sure.
So I think that the minister knows that South Africans are tired of promises. We want actual action points. And the fact that, he's put that ceiling on, the wage bill and stuff like that is a good news story, but I think we need to see more being done for the middle class, that missing middle, which is where the majority of our taxes come from.
Absolutely. So I'm just being told that apparently CNN's New York office is being evacuated because there's some scare about a bomb. Hopefully it's something that will just go away. It's not a big issue. My next question to you is, if you are saying the minister delivered the right messages, why does the market seem unhappy? Superficially reading this, I'm reading the rand is weaker, stocks are losing value, the market is unhappy with the budget.
Well, I mean, the JSE has been falling off for a number of weeks now before even minister's speech. And actually, I think that we possibly could have seen a weaker market if we'd had someone else at the helm other than Tito Mboweni, who is quite loved by the financial markets. So I don't think that that is actually a direct causation, the fact that his speech has had that result on the markets. I think there are other factors at play.
Ashraf?
So, two things. Buy the rumor, sell the fact. And that applied today. You've had the currency go stronger over the since the beginning of the week.
Stronger on the morning.
Stronger on the morning. But importantly, our bond market strengthened down to, the 186s were hovering just above 9%. And they were at 9.27 as the week started.
Right.
So you've had a very strong bond market performance and currency performance, and now that the numbers are out, we know what the deficit's going to be, etc. And we know that there's going to be a lot of fiscal discipline within the various departments. I think they're saying, okay, well, let's just take some profits off the table and let's see what delivery is going to be like. Moody's is going to put out their rating soon because they were waiting for this policy statement, and that will also determine the strength of the currency going forward. If they maintain and they up their outlook, then you would see a stronger currency. However, if they're neutral, then currency stays where it is.
But Ashraf, how can you speak about fiscal consolidation, fiscal discipline in an environment where the government has revised upwards its budget deficit from 3.6% to 4%. And not only that, gone on to say for the next 2 years, we're going to sit at 4.2%. And then what I didn't understand as well was the sort of vague reference that it will sort of stay there in the medium term without any kind of commitment that this thing is going to be brought down within a certain time frame.
So you need the economy to be stronger in order to bring that deficit down.
Not by cutting back on spending.
You're going to have to cut back on spending, but the reality is the wage bill is your biggest expense. And you can't cut numbers. You're going into an election year, so politically they're not going to cut the numbers aggressively. So my view is that they're looking at the current revenue being generated and saying, okay, if we have that revenue for the next 3 years, this is what our budget deficit starts looking like. if the economy improves significantly over the next 2 years, then certainly we'll come back under 4% debt to GDP.
Yeah.
I'm curious to see what Moody's outlook statement's going to be, because they were turning bullish towards South Africa.
Yes.
Does this push them back to being neutral on South Africa?
So I spoke to Ravi Bhatia at S&P after the budget, and he said he expected the downgrade on the growth side of it to 0.7%. What he didn't expect was the widening of the fiscal deficit in the years going ahead, and also that GDP to debt to GDP ratio going forward. From your perspective, I nearly called you Busi. You will understand, right?
No, I will not.
Busi Mhlongo. I won't say that. Samke. From your perspective, is this the best the minister could have done in the circumstances?
I think it's realistic. I think he was honest with the numbers.
Yeah.
I think there
That's
was...
what Malus did last year.
Yes.
He was also honest with the numbers. That's what we all said, right?
And I guess that credibility just is one of our biggest strong points, actually. It's one of our strongest points, that credibility and the transparency anyway in the finance ministry.
Yeah.
But I think, the fact that he did go into details, and the fact that government is casting a more stricter look on the wage bill, and in fact you'll know that the wage bill hasn't increased because of an increased headcount.
Yes.
It's actually just a bigger salary bill. So already there is that,
it's just because
that
these
action
guys
that
are
they're
giving
not
themselves bonuses that they don't deserve, because you're going to underperforming economy, and what are they doing? Busy lining their pockets.
Busy lining their pockets higher than inflation increases, and which speaks to the fact that the cost of living that we are suffering as a result of 10 years of state looting is being felt by even the very people in public administration who are now increasing their salaries at higher than inflation, which many companies don't have the luxury of doing. That's why you're seeing your unemployment rate rise. Companies are retrenching. You've got lower tax revenue because companies aren't simply generating the profits that are necessary to have the adequate tax collection for you to manage your fiscal deficit. So it was quite honest. It was, I guess, in terms of direction, we've had a number of such promises and direction, and policy is always good in SA. But how well can they affect those policies when you still have state-owned entities that continue to be a drag and a drain on the fiscus?
Absolutely. And I'll ask you a question that I asked Ravi Bhatia at S&P, and the question is, here it comes. Drum roll, please. Right. The question was, to what extent does this budget leave you in a position where you have to downgrade South Africa, or perhaps relook the outlook? Or is it an enabler in terms of preventing that downgrade? So I'm rephrasing that question slightly. Have we dodged the bullet with this budget, or have we worsened the prospects for getting a downgrade?
I mean, when credit ratings agencies assess a country, they look at its ability to honor its bonds and its debts.
Yes.
And I think if you look at the fact that we've over the year have had a weakening rand, and if you look at the fact that we have a high interest bill, and you look at the fact that you've got a lower tax base, then it raises the risk of that sovereign default. And I don't know how many times we can dodge the bullet, and I don't know for how long Moody's, which is the only agency that hasn't rated us junk, can actually give us a reprieve. I don't know.
If you look at Italy, which has been the big story in Europe, I mean, their debt to GDP number was going out to 3.6, and Moody's took them down to 1 above junk.
Sure.
So
that's where we play.
So it's pretty much in line with us, okay? And the question now is, does Moody's look at South Africa and say, you've got the right people at the helm, and therefore we will keep the 1 notch above junk? Or do they say, well, negative outlook? They're not going to downgrade us, but are they going to?
They will look at that outlook.
Are they going to downgrade the outlook? That is the bigger concern.
I spoke to Peter Tadmontalto, ex-Nomura, now with Intellidex, and he said there's a decent risk of a downgrade of that outlook. Is that something you'd agree with? Yeah.
I'd say there is a risk. However, do they take a softer tone on South Africa to give
this
the
team
government a chance to deliver? That's really the question.
Yeah. Was there anything in the markets in this budget for the markets?
From my perspective, not explicitly. I think it focused more
Cake
on
and
social
flour,
issues. Zero rated. I think it focused more on the social issues than sort of business and investor confidence. It touched on the fact that, you know, obviously the president has prioritized making sure that our policies are stable and do up our investor confidence. And perhaps Moody's will even wait and see the outcomes of the investor summit that is kicking off tomorrow to see if there's anything there, any green light that says that we'll be getting some funds into the country.
Absolutely. Anything you didn't like?
No, nothing that I was uncomfortable with, but I do think we need to start seeing action at state-owned enterprises.
Right.
Your earlier commentators discussed SAA. I think that has to do a privatization transaction. There's no other choice in that. And I think there is some low-hanging fruit at Eskom, especially on the procurement side. They can certainly cut costs back there.
Yeah.
And if we see those results coming through, I think that will help us with the rating agencies.
Absolutely. So it's going to be now wait and see. By the way, S&P is going to come and pronounce on the 23rd of November. Moody's, we're not too sure how long they're going to stay after this budget and make that announcement. But we shall invite you when that does happen. Thank you, Ashraf.
Thanks.
Thank you, Samke.